Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to another episode of Tax Smarts Unlocked. I'm your host, David Robson, and today we're diving into a topic that's been on everyone's mind lately: inflation. More specifically, we're going to explore the impact of inflation on small business tax planning. Inflation affects everyone, but for small business owners, it can have particularly profound implications. So whether you're a seasoned entrepreneur or just starting out, knowing how inflation can affect your tax planning and how to adapt is crucial. Let's break it down and see what strategies we can employ to keep your finances in check, even when the economy throws a few curveballs. First, let's talk about what inflation actually means and how it's currently trending. Inflation, in simple terms, is the rate at which the general level of prices for goods and services rises, eroding purchasing power. We've seen varied rates of inflation over the past years, and as of now, there's been a bit of a roller coaster ride. For small business owners, inflation can increase business expenses, and managing these changes effectively is critical. If you're running a small business, you might have noticed that costs for raw materials, labor, and utilities have fluctuated. This can disrupt cash flow and strategic planning. Understanding these trends is step one in effectively planning for the tax season, because your tax deductions and the credits you may leverage can be significantly impacted by these inflationary changes. Now let's explore how inflation specifically influences business expenses and cash flow management. When inflation is high, the cost of goods sold often increases, leading to tighter profit margins. As a small business owner, this is where strategic cash flow management becomes critical. In times of inflation, prioritizing cash flow is key because it's cash that keeps the business moving. You'll need to make sure that you can quickly adjust your budget to accommodate rising costs, whether that's by renegotiating with suppliers or adjusting pricing for your products and services. On the other side of the coin, you have to consider how inflation impacts the cost of borrowed money. Interest rates often rise with inflation, which can affect your business loans or any credit lines you rely on. All of these aspects of inflation feed directly into how you should be planning your taxes. Inflation also plays a critical role in tax deductions and what you should be considering. During inflation, some deductions may become more valuable, whereas others might lose their impact. A classic example is depreciation. As the cost of replacing equipment rises with inflation, the standard method of depreciation might not fully capture the actual wear and tear and the eventual replacement cost of an asset. You may need to consider different methods of depreciation, or even Section 179 expensing for certain types of property. Another area to watch for is the effect on your taxable income. Inflation can subtly inflate your income without increasing your real purchasing power. Hence, planning your deductions to bring down taxable income becomes even more crucial. Now, shifting gears to optimizing credits in an inflationary environment. Tax credits can sometimes be more impactful than deductions because they reduce your tax liability dollar for dollar. However, inflation can affect their applicability or perceived benefit. For example, credits related to renewable energy investments or research and development might become more attractive as they potentially provide relief from increased operational costs. It's essential to stay informed about any changes in the eligibility requirements or the maximum benefit caps for these credits, as they can shift in an inflationary economy. Keeping an eye on evolving legislation around these credits is also important, as governments occasionally adjust tax relief provisions in response to economic conditions. Let's discuss some real-life examples of businesses adapting their tax planning in response to inflation. Consider a small manufacturing company that over the past year has seen raw material costs soar. This company realized it needed to update its pricing strategy and inventory management to prevent profit loss. They also revisited their capital expenditure plan, leveraging accelerated depreciation methods and carefully timing their equipment purchases to maximize tax benefits. In the service industry, a consultancy firm might adapt by increasing its hourly rates and leveraging work-from-home benefits, reducing overhead office costs, and optimizing home office deductions for their employees. While these strategies aren't new, their importance is heightened in periods of inflation. Now, let's address some common pitfalls small business owners face during inflationary periods when it comes to tax planning. One major pitfall is failing to adjust estimated tax payments in light of increasing revenues that appear larger due to inflation rather than actual growth. Another common mistake is ignoring the effect of inflation on future financial projections and tax liabilities. Often, business owners might fail to update their projections, which can lead to cash shortfalls or underpayment penalties. A lack of proactive planning can leave businesses scrambling at year-end, trying to find quick fixes to lower their taxable income or decrease their liabilities. Having incorrect assumptions on inflation's nature can lead to business taxes being miscalculated. With these challenges in mind, there are various tools and resources available to assist in proactive tax planning amidst rising costs. Accounting software that accounts for inflation and adjusts projections accordingly can be a game changer. Leaning on financial tools that offer scenario planning or considering different inflation scenarios can provide clarity in how you should adjust your business strategies. Furthermore, engaging with economic reports and forecasts regularly can give you insights into market trends that influence inflation and tax planning. Also, tax-specific tools that help identify the most effective credits or deductions given current economic conditions can significantly aid a business in staying prepared. Finally, let's talk about the importance of working with a professional tax planner in times of inflation. While small business owners are resilient and innovative, sometimes the complexities of tax planning during inflationary periods call for expertise beyond a spreadsheet or software. A tax professional can offer valuable insights into new laws and regulations that might come into play, providing guidance on both immediate tax concerns and strategic long-term planning. They can also help personalize strategies to fit your business' unique circumstances and ensure compliance with any changes in tax law that typically come with shifts in the economy. Collaborating with a tax planner means you're bringing in a partner who can translate tax code into practice, focusing on keeping more of your hard-earned money in your business. As we wrap up today's episode, I want to highlight the key takeaways. Inflation can have wide-reaching impacts on your small business's tax planning, making it important to stay informed about inflation trends and plan accordingly. We discussed how rising costs impact your deductions, credits, and cash flow, emphasizing the need for strategic planning and possibly adjusting traditional approaches to asset management and operational costs. Utilizing a blend of tools, resources, and professional guidance can significantly alleviate the stresses inflation imposes on your business. Thank you for tuning in to Tax Smarts Unlocked. I hope you walk away from this episode feeling a bit more prepared to tackle tax planning in an uncertain economic environment. Until next time, stay smart and proactive with your taxes, and remember, we're here to keep you equipped with the knowledge you need for financial success.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.